All right, good morning, everyone. This is Brian. We also have Forex Joe here with us today. It's Tuesday, September 17th, and we're here for Forex Live. And today, as always, we're going to be utilizing Forex Joe's daily regimen for live trading in conjunction with the daily report to identify some potential trades for us to take today. Before we get started, however, we do have to let you know that unique experiences and past performances do not guarantee future results. I think everyone here understands that trading involves risk, and we shouldn't risk anything other than risk capital. But I am going to pause for just a moment to give you a chance to read through that, and then we'll get on with our trading day. All right, very good. Well, let's get started. Let me close this down. Still kind of a quiet market. I kind of expect that for the remainder of the day coming into tomorrow. Really all eyes are on this FOMC. I know a lot of us really expected to see the market start to move last week, and just didn't do much of anything, did it? Just been kind of dead. So not much happening at all, and we're waiting for FOMC at this point to figure out what they're gonna tell us and what we're gonna do about it. Maybe that'll be the catalyst we need to finally get the market underway. So what we're going to do today is we're going to walk through the daily regimen. We're going to do that on 3 currency pairs. We're going to do it for the Euro USD, the Pound USD, and the US Yen. And we're just going to simply walk through how we utilize the daily report and Forex Joe's daily regimen to find potential trades. So it gets kind of repetitive, but repetition, is the mother of skill, as they say. So we will we'll continue to do that and get this thing figured out. So starting with the Euro USD, and by the way, we'll see this in a second. Let's just go ahead and get to it. We'll talk more about what we're seeing here on the Euro USD in just a minute. So current price trading at 33.52. 33.52, and first thing we're going to do is have a look over here at our daily report and find out what our channel information is telling us. So let me just there we go. So the channel information is saying that what we have here is a channel top at 33.58, and we have a channel bottom at 33.29. And the one here at 33.29 is a 3 of 3 channel. That means it's lining up on a short-term, a mid-term, and a long-term level here at 33.29. So that's a big number for us. We'll want to put a star by that so that we know that that's a very heavy level 3 of 3 channel. Next thing we want to know here is on support or resistance. Where are our support resistance numbers? And by the way, real quickly, for those of you that might be new here, what I'm looking at, I haven't shown this in a while, what I'm looking at is the daily regimen for live trading. So what I'm walking through here, if you go to your members area, go to Forex Live, go to downloads, and you'll find this daily regimen. You can either find it in Word format or PDF format. So what I'm looking at is this document, and you can print that out, download it, whatever you want to do, and I'm just simply walking through this step by step to complete this bottom part here. So you'll often hear me writing. This daily regimen is what we use to complete our checklist before a trade. Keeps our fingers off the button, documents the trade that we're doing, also serves as a trading log or a trading journal. So has a lot of purposes and really helps us out when we're utilizing the system and placing our trades. So anyway, that's what I'm looking at. And you can get that from the Forex Live /downloads area. All right, support and resistance. Well, we're trading at 33.52, so we know that we have a resistance above us at 33.57. And for support, there's a support level down here at 33.07. In between there, however, is 33.29, which is a 3 of 3 channel we'd want to keep our eye on. If we break below 33.07, we've got 32.08, I'm sorry, 32.80. And if we break above 33.57, then we've got 33.67 followed by 34.04. All right, are we trending or oscillating for the day? on this euro. What's going on here? Trending or oscillating? Really, it looks like we're in a bit of an upward trend for the day. So, but overall, the bigger question here is, have we broken above 33.58 for our channel top or below 33.29? So let's just see where that is. 33.58 is right here, and 33.29 is right down here. So have we broken those? Well, we've pushed above both of them, but we're back down below. But yes, we have broken the channel. We'd actually broken closed above up here, and we've broken closed below down here. So it's still kind of wishy-washy, but we have broken our channel, yes. But next question, what's our ADR? What's our average daily range? And average range is telling us that we've only moved 43 pips today. Not much at all. Now, on the short term, yesterday was a very tight range. Day before was tight. So, on the shorter term, we're looking at about 60 to 70 pips for an average range. If we look out to about 120 days, 130 days, we're looking closer to 100 pips. We probably won't see that again today. We probably will see this very, very range-bound market as we come into FOMC tomorrow. And Forex Joe will talk more about that. So for our range here, we're probably looking at somewhere between 65 and 75 pips. Next up, news. What news is on the agenda that we should worry about? And what we're going to do is we use forexfactory.com, and this is a great source for us to see what news is coming up, what planned news is coming up. And we actually don't have any for the remainder of the day. There is no more news for the remainder of the day. And when I say no more news, we're looking for these red reports. So I'm looking for these high impact reports that could potentially be a catalyst for a major market move. And we don't have any more of those slated for the day, so we can go ahead and place trades for the next few hours without worrying about any kind of a whip occurring or anything of that nature. All right, and the last thing we're going to have a look at is our futures market. We want to know, how is the futures market performing? Where's the lean? How's the Dow doing? How's crude doing? How's gold and silver doing? I don't know why that's been flashing. Last few classes I've had this thing, when I move my cursor, just flashes black and white. I don't know if you see that on your end or not, but I apologize if you do. So what we're seeing right now is there's the Dow is up slightly, crude is down, gold and silver are both down, and we look overall at the dashboard, just a very mixed bag. So the futures market is kind of even right now. Very mixed. Typically, we want to see, if the Dow, gold, and silver are up, we're going to see the dollar down, and then conversely, if these are down, the dollar should be up. And it is slightly. I mean, we see the Dow's up, the dollar's down just a little bit, but it's still very mixed. These are all kind of mixed together here, jumbled market for the day. So, with that said, we've now captured all the information we need. We've got our current price, we know where the channels lie, we have our support resistance information, we know what the current trend is, we know if the channels have been broken or not, and what our average range is, we know if there's news coming up, and we know what the futures market's doing, kind of where that's leaning. And now we can go ahead and start placing some trades, or at least looking for some trades that we could place. So, pop back over here. And I got a couple of things going on. First, I want to point out, last night in class we saw 33.29 as a major channel. I didn't take a trade off of that as far as parking a trade. And the reason I didn't park a trade last night is, if you look here, we had coming in Friday into Sunday's open, there was a gap. And we knew price was floating down yesterday, and it was hovering around this 33.29. And during class last night, I just simply said I wouldn't park a trade here. We'll look at this intraday. But I didn't want to park a trade because I still feel like, this could have pushed down to work to close the gap, at least to come down to 3,300 before it came back up to 33.29. So I didn't want to get myself caught in a trade that had a high probability of going against me. Ultimately, it didn't. It came down right down to 33.29 and bounced. But I stayed out of that trade for that reason. So those of you that might have been trading it live might have done that differently. But for me, parking the trade, going to sleep, didn't make a lot of sense to put it there. So that's the reason I didn't take that trade last night. All right, so what are we doing now? Well, we've got 33.29 is a major level down here. This is a 3 of 3 channel. It's also the channel bottom for the day. But we're concerned about, let's compress the channel a little bit and find some trades we can take today. So what are we seeing? Well, on our channel here, on the report from Forex Show, there's not a whole lot for us to really look at. We've got a channel top at 33.57, which coincides with our support resistance level. So this is a resistance level and a channel top. We've got 33.67 as the next level up, which is where price moved to and repelled off. And now here we are to coming back. And so if we compress the channel a little bit, what we've seen, you know, is we have a level kind of through here where we're seeing, you know, kind of some, we saw resistance yesterday. Then it was, I'm sorry, support. It was broken, resistance, broke it. We saw it kind of a decision point, broke down. Resistance here, finally broke above, and we've got support. So, you know, where we're trading right now at this 33.53 could be a level to trade off of. I'd like to see it go a little bit lower than that, and you know, maybe even pull back here to kind of this Asia coming into the London Open down here at 33.50, 33.47. So I'm going to park a buy down here and see if we can push down to this level, and then we'll look to take that back up, and then I'll park a sell here at this 33.68. And I'm doing this because we've compressed the channel, and what we're doing is we're looking to see where price has some opportunity to stall out for us. Oops. Oh, come on. So all we're doing here is just grabbing our lines. So we've got the pending order software, and all I'm doing is grabbing my buy and my sell lines, the green for the buy and the red for the sell, and then we're just simply moving those into place where we'd like to have them. Now again, we're keeping our stops close, and we're keeping our take profits tight as well. We're just looking to grab a few pips. We know it's a very range-bound market, so we're going to trade that accordingly. We're not expecting huge moves. I mean, obviously we will see a breakout at some point. It definitely will. We're just going to try to capture a move where we can prior to that breakout occurring. Let's get these up here where I can see them. So again, we're not looking to risk a whole lot. We're keeping our risk fairly low. You know, just looking to risk, you know, less than 10 pips on that, and then we're looking to take profit at about the same. All right, and then all we do is we simply click move to buy and sell, and that triggers that order, and now we can wait to see if price will move to us and get us filled. Okay, let me just make a note of what I did here. So we compressed the channel a little bit, and from that compression of the channel, we identified our entry area, and from here we can let it go. So we're selling off of a resistance level that's been identified on the report from Forex Joe, and we're buying on a support level that we identified by compressing our channel just a little bit. So next up, we'll do the same thing for the pound USD, and then again for the US yen. Pound USD currently is trading at 5,900. It's a great spot to look for a reversal, big whole number like that. But we're not going to get. Let's do the work before we get antsy on that. Channel information on this one. So we're currently trading at 5,900, and the channel information on this one is telling us that we have daily channel bottom at 58.60 and a channel top at 59.28. No real alignment here. We do see 60.44 above us, so if we break through 59.28 and push up, 60.44 would be the next logical point for seeing some resistance up there, especially since that's a 2 of 3 channel. But presently, looking at just at the short term, there's no real alignment here on the short term. So document those. Next up is support resistance information. What are we seeing here? Well, we're currently trading at 5,900, so we've got resistance above us here at 59.24, which is pretty much in line with that 59.28. So we're right here. You know, these two are kind of in the same area. If we break through there, 59.61, that's where we may go. For support, we've got 58.75, followed by 58.23, and then in between there we have our channel bottom. Are we trending or oscillating for the day on this pound USD? Pound USD, it looks like we're oscillating a bit. We've pushed up, we've pushed back down, pushed up following some positive news, and now we're back to pretty much right where we opened. So oscillating for a bit here. Have we broken our channels? Have we broken above 59.28 or below 58.60? Just put those on here. Right there. So the answer there is no. We pushed it, we pierced it, and rejected it a couple times, but we have not fully broken through there. Closed above. What's our average range? Well, today we've only moved 51 pips, and our average range for this pair, you know, short term 60 to 80 pips, longer term we're about 114. So expecting that we'll kind of remain in that short term range, we're probably 60 to 80 pips on this currency pair. Is there any news coming up? Well, we know the answer to that's no. There is no news coming up, no new news. We did have news earlier, had some positive news out of Germany, but nothing on the pound. We had some negative news up here, pound, kind of lackluster, just not really much going on. And we expect that. We expect to see this market remain kind of range bound until we get that FOMC announcement tomorrow afternoon. What's going on in the futures market? Well, not much will have changed in the last 10 to 15 minutes that we've been talking. Right now we're just seeing kind of a very mixed futures market. Dow's down, or Dow's up slightly, gold's down slightly, silver's down, crude's down. Just kind of a mixed bag. So we want to be careful there. That means it can swing one way or the other. We don't want to get caught in any specific direction. All right, so we've captured some information here, and what we're going to do is pop back over, go to our charts, and see if we can find some trades. I'm just going to move these up because I'm going to make my screen a little where I can see these numbers. I'm just going to get all these on my screen so I don't have to hunt for them in a minute, which sometimes we have to do. We have to compress that price bar so we can actually see where these levels are. All right, so there we go. So let's make that a little bit bigger now so we can see what we're doing. All right, and we're kind of here at a decision point. We're hanging out here at a big hole number of 5,900. So we've been hanging out. We've broken a little bit below it. We're currently at 58.96. So we've pushed down just a little bit here. What are we seeing? these out of the way. Well, we have our channel support resistance down here below us at 58.75. So if we did continue to push down, we could potentially see reversal down here at 58.75. If we compress this a little bit, though, we're really seeing, we kind of bottomed out yesterday right here. We've seen this 58.93 holding up pretty well as a support level. So, and that's right below where we would expect from the 5,900 as an area. You typically see those whole numbers as a reversal point. So what we could do is we could pop down here and park a buy. Just compressing this channel a little bit. And again, we don't want to get crazy. We're not looking to get 20 pips or anything on our first. We're just going to keep our stop loss fairly low. So we're keeping our risk low, looking to take profit fairly quickly and lock that in. So we can move to buy and get that one on. And then we can also look for some sells. We have our channel top up here at 59.89. What's above that? I'm sorry, 59.29, 59.29, 59.28. So above that, we've got 59.61, which is right up here. $59.61. It's about 80 pips bottom to top. If we pushed up there, that'd be a great spot to look for a reversal on this, just like we did the other day. You know, if we push to the top, that's about the that's pushing what our range would normally be on this. Don't want to get too crazy on it, but you know, if we did push there, great spot to look for potential reversal off of that top up there. Looking a little closer, you know, depending on how tight this ends up being for a range for the day, we might even watch this level right here at this 59.28, the channel top, as a potential reversal point as well. But we'll bracket that in here, see if we can get some movement and lock in some pips off of this 58.93, which is really set up as a nice support level for us when we compress these channels a little bit. Could also look here for a potential sell point for scalpers, and we're looking for some intraday trades. We could look right through here at this 59.14, 59.15 area as well. Yeah, but I'm going to leave these trades here as we have them. Look for this buy off of 58.93. And that's just simply support level from a compressed channel. And then we've got our sell up there off of a support. It's off of a resistance level from the report, which also coincides with what our normal range would be on this currency pair. Alrighty. So there's that trade. We'll let this one play out, see how that comes along for us. And then finally, we've got the U.S. yen, and the U.S. yen is currently trading at 99.27. Channel info here. We know we've got a channel top up there at 99.67. All right, so U.S. yen, we've got a top at 99.67. We've seen that number quite a bit over the course of the last few weeks. It's really been struggling there. And 99.67 is lining up 3 of 3 channels, short-term, mid-term, and long-term. So 99.67, big number for us. Channel bottom, 98.78. It's one of those mornings my stomach is growling so loudly. I swear you can probably hear it through the mic. I know you can't, but it's just crazy. It kind of cracks me up. Didn't have breakfast before we started today. Support resistance levels. What are we seeing? Support resistance. Well, we're currently trading at 99.27. So following the methodology here from Forex Joe, we just simply look here at the report, and we find the levels that are near where price currently is. So we're at 99.27. So we know that below us we have support at 98.91, and then below that 98.78, which lines up with the channel bottom. And then above us, we've got 99.44 as resistance, followed by 99.55 and then 99.67. I would favor 99.67 over the 55. So that's a 3 of 3 channel. Are we trending or oscillating, though, on this currency pair? And really just chopping around. We're oscillating a bit here, as we have seen on the others. And I think that's been, oscillating has been the word of the last couple of weeks, last few weeks. We've just really been oscillating, very, very strong channels that we've been seeing. Have we broken our channels at all? Have we broken above 99.67 or below 98.78? And the answer there is no. We've been trapped right in the middle. 98.78 is right down here. 98.78. Close enough. 98.79, and then 99.67 is right up here. So really trapped right in the middle of there. What's our average range? Well, again, short term, it's not moved a lot. We've seen, 50, call it 55 to 75 pips for our average range. And look a little bit longer, we're 90 to 120, but I don't know that we'll see that until after these markets open up again. So right now, we're really trapped. Today, we've only moved 35 pips. That's not much at all. That's really very, very quiet for this currency pair. News, of course, we know that there is no news coming up. Just want to get in the habit of clicking there, but we know that there's no news coming up. And then finally, the futures market, and again, that's not going to have moved too much here in the last couple of minutes. Now, do keep in mind your floor traders come on at 8:30 Central, so we would expect to see something, at least some movement here, probably the next 15-20 minutes. So they're coming on right about now. Your floor traders are getting underway, getting ready to start screaming at each other, figuring out what they're going to do with the market here at these futures. So we'll keep that one in mind. But right now, very, very mixed bag. Same thing we've been seeing. So anybody's game. We'll see if this Dow is going to continue to push up, or if we're going to take a retracement back down. If the Dow starts pushing back down, we'll see strength in the dollar. If it continues to climb, we're going to see weakness in the dollar. So be interesting to see what that ends up doing. For now, let's look at some opportunities to place trades. Well, we look at, let me grab these lines so I'm not moving them later. Let's just get them down here where we can see them. And see if we can find some trades on a shorter term that we can take here. Grab one more profit line up there. And again, if your profit lines are off the chart, yeah, sometimes you just have to simply grab this price bar, scrunch it down so you can see some extra real estate, and then you can find those and drag them down to the area that you're trading in for the day. And as we expand this back out, well, we can actually look and see what we've got here. All right, so there we have it. Now, support resistance levels from the report, we have 98.91, 98. Get this little bar out of my way. 98.91's down here. We have 99.44, which is up here. So really on a compressed level, we're not seeing these numbers. Oops, 98.44. I said not 41. On a compressed level, we're not seeing the current market even near the support resistance levels that we've identified. So what we can do is we can now compress this just a bit and see where are some additional areas for us to watch. Now, compressing this channel, we can look through here, and for the current trading day, we're seeing right here at 9909, 9900 area as showing up as a pretty good level of support for us. We've seen it just really bounce a number of times here, and it's finally pushed up, showing U.S. strength coming into the open of the commodities exchange. And then up here, we've seen this area, this 9930, respected a couple of times now for reversals off of that. So if we really wanted to compress this channel down, what we'd look at would be sells off of this top and buys off of this bottom that's been established for the day. Now, will price push through there? It absolutely will at some point. We know we're going to be wrong once. We just want to try to catch that top or that bottom before price makes its major move. So that's what we're looking for here. And this may not let me put on the sell because we're so close to it, but we shall see in just a moment. So we're just looking to grab a few pips off of that buy or off of that sell. We're not looking for anything crazy. We don't want to risk 30 or 40 pips to make 5. So we're keeping our risk and our reward fairly tight. And once we get that set, we simply click to move to buy and sell, and it brackets that order in, and voila, we're ready to go. So there's what we've got for the U.S. yen, and that's just on a compressed channel. So what we've done is we compressed our channel a bit from what we saw. So we have the channel information that came from our reports, but then we compressed that just a bit to see where our other levels of support or resistance that we're seeing for the current trading day, compress that down, and then we enter our trades from there, and that's what we've done. So with that, I'm going to go ahead and turn it over to Forex Joe, and Forex Joe will give you the remainder of his commentary for the day to see what he's seeing and what he's expecting to see for the day.
Okay, good morning, Brian. Good morning, everyone. I'm expecting to see us range bound for the rest of the day as everybody prepares as the FOMC meeting gets underway. This is the most anticipated meeting that I can remember since around 2008 when we had the last crash. It's really been much ado about nothing. We've had confusing news events. It seems like the Syria mess has been taken off the board. Looks like we had that catastrophe yesterday here in the U.S. In a shooting with 13 people being killed. It kind of took the deflection off. The biggest issue that the hearing that we're talking about now, besides the FOMC, is what's going to happen as far as being able to deal with the fact that we have a debt ceiling that needs to be addressed. So right now, we are in kind of a holding pattern. I am going to have a class tomorrow. We have it registered. It's at 12 o'clock Eastern, 11 o'clock Central. This will be 2 hours before the FOMC meeting. We will be using our rules of engagement for news events. For those of you that are trading, we will kind of bring everybody up to date. There will be a report this afternoon. I will go ahead and do the 5 o'clock report. We've been kind of, and thanks to everybody sending the emails that kind of likes these early reports. It seems a lot of you like these reports in the morning, either before the opening of the stock market or at the London close. And we really kind of fell into this because of the summertime blues. So we'll try to take this into consideration and see when is the best time during the days with what's happening under current market conditions to put out the reports. You know, for years, we always waited until 5 o'clock Eastern, New York time, to construct a report. And then at some point in time, we used to have updates in the mornings along with that report. So in the best interest of time, we are finding that with what's happening under current market conditions, we've found a solution to this problem for further enhancement. So we'll continue to do that. There will be a report later on this afternoon. We'll do that report at 5 o'clock Eastern. There will be a roundtable report. If you're a roundtable member, get ready. I'll be putting a plethora of information in. I'll be suggesting what to do in the roundtable report with the possibility of what could happen. It's pretty much under the scenario, what do I know, what do I think, and what can I prove? that we've talked about many, many times. So this will be tomorrow at 12 o'clock Eastern, 11 o'clock Central. Go ahead and get registered. It's in the office. Um, it is in fact, I think it's, Brian, I think we'll send out a link with it today. Is that correct? I think Chuck put it in last night. Is that right? Some people are saying it's not in the members area.
Yeah,
I don't know.
in the
If
back
Chuck,
office. We'll
yeah,
make sure that's updated today. So that should be in the back office, but I'll send out a link as well, just so you've got it.
yeah. In fact, go ahead and we'll get that out, but it should be in your back office. I think Chuck put it in yesterday afternoon. So just get into the back office, and you'll be able to see it. You'll be able to link into it. We'll be sending that link out to it. We're going to be inviting a bunch of people tomorrow to this anyway. Then we'll have class Thursday morning. We'll have kind of a end of the week meeting here on Thursday of what exactly has transpired. We'll let it settle. I'm getting confusing. Many of the big traders that I know that I've worked with overseas are still sitting on the sidelines. In fact, a couple of them are still on trips, and they're pretty much laughing about what's happening in the markets. They know the ranges. They're playing within these ranges. You need to pay attention to the fact that the Aussie dollars came up all the way to 93. Continue to look on any drop in the Aussie dollar. And what's happening there. The only issue there is that gold continues to go down, but the Aussie dollar keeps going up, which is confusing. And normally the Aussie dollar is tied into gold, but gold has dropped tremendously. Let me grab some water here real quick. Let me apologize here for a second. Much like Brian's stomach growling and eating breakfast, I'm getting a little parched, so I apologize for that. So we have the Aussie dollar. The key area there is 93, and with gold right around 1,300, you need to pay attention to see if gold goes below 1,300. If gold goes below 1,300, then you're going to have the Aussie dollar. It's probably going to retest 93 and go below 93. So everybody keep that in mind. I mean, I'm giving this to you live right now as I'm surveying, and the last I looked, the Aussie dollar was around the 93.50 range. As far as the euro pound, the pound has been strong. It has been the driver of the bus. Those of you that's been with us for a period of time know that we always look at the euro pound as a way to see which currency is driving the bus. Well, the euro pound has been driving the bus for a period of time. We've broken below 84. 84 is a key area. So I think in this session we've been around 83.80. We've been around 84.15. If you are trading the pound dollar, or excuse me, the euro pound, and watch and see what happens here over the next few sessions, because right around 84 is going to be some action. Now, the euro pound doesn't move as much, but it pays a lot more. So in other words, we're looking in some instances $1.60 per pip for those of you that trade that. So be cognizant of the fact that the euro pound, and if the pound is still strong, looking for a sell or a bounce above anytime it goes above the 84 area and reverses. On the other part of the equation, we have some elections coming up this weekend in Germany. We've talked about that in the past, and I think it's going to have an effect on the euro next week. So it looks like we're going to start getting a confluence of events that's going to open this up. The traders are not going to sit on the sidelines forever. Right now, money's moving. They're moving money out of the stock markets. We saw that Larry Summers, which you were astutely alerted to yesterday, decided that he is not going to be the Fed president. And this was the #1 choice. The Obama administration has taken a lot of hits. They took a lot of hits with the Syria fiasco, and now look what's transpired there with Russia getting involved. They're taking a lot of hits with the current situation now in the markets. They're taking a situation where their #1 choice for the Fed, Larry Summers, has said, I don't think I want this job. And now they're kind of looking towards the debt ceiling. So at some point in time, this administration is going to try to make a statement, and there's going to be some type of war. So that is going to open up. Then we have the confluence of events. Usually that September is really good for the stock market, and we've seen the stock market climb above 15,500. Once again, if you're going to trade the euro today, if it's around 33.50 area, we're looking at 33.29 all the way up to about the 33.80 area. It may be much ado about nothing. If the stock market gets above 100 points, then it should weaken the dollar a little bit, but that might just be placement before we get started tomorrow. Unless you're scalping or day trading, okay, prepare all the pairs that you're trading with the ranges, with what I'm getting ready to give out later on this afternoon. I just sent out a report, take a look at what's happening, and get a good night's sleep, because it's going, if it doesn't open up tomorrow, it's going to open up here in the next week. Now, our options here for tomorrow is, this could be much ado about nothing. Everything's already factored in. So we could have a little bit of volatility, because here's what takes place. The FOMC will make their announcement. Everybody's going to dissect every word in that statement, and there's going to be a little bit of movement. Then what's going to happen is, after that, you're going to have a situation where we have a press conference, and they're going to listen to what Bernanke has to say. So instead of being live for that, we'll try to take a precursor beforehand. Brian will walk you through the process. And here's the one thing that does not get old, okay? You are learning to trade. Repetition is the key. So we do this every day, whether the markets are moving or not, but it's called preparation. Any championship team in any sporting event practices. Now, those of you that are overseas, it's football's big, it's called soccer. They do the same thing every day. They run up and down the field, and hopefully somebody gets a goal or two, and they play defense, they run the clock out, and they try to score, and people are going crazy. If you're in the U.S., you're running each and every day practice, and what happens? Then you've got a situation where you are trying to beat the other football team so you can move on and make the playoffs. It's called a season, it's a repetition. What's really great about this is that our repetition has withstood the test of time. It allows you an opportunity to do it over and over and over and over again, to where you get a comfort zone with what's happening. Now, Brian made an interesting statement that I was actually working, and I heard him because I have him on in my ear, is that he did not do anything for 33.29, and he explained why. He thought it was too much risk for what he was doing. There is nothing wrong with that. But here is the key that everybody needs to understand. Even though it did bounce near the 33.29, and you could have got maybe 20, 30, 35 pips, whatever the number is, and it did work, Brian's assessment was right for his trading style. He didn't want to sit there. He didn't want to set the trade, and because of what had taken place, because of the gap that had happened on Sunday. Now, some of you have asked, how come the market's gap? Let me explain this to you so you have a full understanding. I've explained this many, many times. If I want to trade, I can get into the markets at around 1:30 Central, 2:30 Eastern, New York time. 1:30 Central, 2:30 Eastern. That's when the major traders can get in. So the gaps are there for about a 3 to 3.5 hour period, where the major traders are positioning themselves before the overall markets open, usually at 6 o'clock Eastern, 5 o'clock Central New York. 6 o'clock Eastern New York time, 5 o'clock Central Dallas and Chicago time here in the U.S. So you have the gap comes from traders who are hedge fund, huge traders, people that are institutional traders, have early access. Usually these are the people that are in the ECN networks, and they are setting trades and they are positioning. So anytime that you have gaps like this, it's called positioning, and the gaps have only come into issue here because back in the old days, in the Wild Wild West, we used to have gaps of normally 40 to 60 pips. This is all the way back in 2001, 2, 3, 4, and then it really slowed down from 2005 and above. Here recently we've had a few gaps, so anytime that you hear the word gap, that's what the gap translates to. It's just that the big boys, the sharks, are participating, okay, and retail clients, they're going to have to wait and get a piece of the pie after that has happened. So anytime that we have movements and it's gapped, it kind of throws off the Sunday night report. So what Brian was saying was accurate. It did not make any sense because of that gap, because of what he covered, for him to get involved, even though the trade did hit. I would encourage everyone to hit these trades or do these trades in a practice regimen account so you gain that type of experience. This is just one example of how you can gain experience under current market conditions using that scenario. Now, we've got gold. I just see it's around 13.12. It's down $5 for this session. We've had a drop from the 13. Wasn't that long ago. It was at 14, then it was at 13.60. Now we have a situation to where we see the yen went right to 99 and bounced. Now, if you're a long-term player here, you know that 99.01 is the number. The next number between 99.01 is 99.67. So if you're a day trader or a scalper, you're not going to get into this trade for 60 pips. Now, if you are participating, you're looking for your spots, and you should be doing this in a practice regimen account to get used to it, because I think the US yen went almost right to the 99.01, 9900 area, and it's only moved, what, 37 pips the entire session. 37 pips is great if you're a scalper or a day trader. If you're a swing trader, you might have been able to get to take profit one and really not much going on, and you're sitting there waiting. Now, I would suggest that you go ahead and take the trade off. If you are in the trade at 99.01 and it gets up to the 99.30 area or 31, that's 30 pips. Why not just go ahead and take profit one, take profit two, and then if it comes back and takes you out, you've still gotten 2/3 of your profit. But if it does happen to go up to the 99.67 area, or if it does not come back to 99.01, and let's just say we get a confluence of events that pushes it above 100, you are in. Otherwise, it may come back and you'll get another opportunity. The difference that you need to understand is that when you take your profits, you have to calculate what your risk factor is and what it is that you're trying to do with the range-bound markets. So in other words, if you're a scalper or day trader, you have your set goal. Your take profit one as a scalper may be 5 to 8 pips. Your take profit two may be 8 to 10 pips. Your take profit three may be 12 pips, and you're out the door. You don't even want it to come back because you know it's coming back. As a day trader, it's going to change, and those numbers will change. As a swing position trader, you have to understand what the markets are yielding. And when we're having markets that's only moving 40, 50, 60 pips, and you know it's going to come back, it doesn't make much sense to keep pushing and take profit one and take profit two and then let it come all the way back each and every time. Go ahead and take that profit, because as swing and position traders, what are you doing? You're building your stop loss account. Let's use a quick example. Let's say that we got 30 pips out of this US yen trade. And you go ahead and you take profit one, you take profit two, there's 60 pips. Let's say that instead of letting it come all the way back and taking you out, you take your other and you let it just go to 25 pips, and you take it, now you've got 85 pips. Well, at the first of the month, this is what everybody should be doing as you accumulate your 200 pips. Your number one goal is to not take much risk at the beginning of each month until you get your 200 pips and you've locked those in. Then you're able to take more risk, and I don't mean risk to where your account is risk. I'm talking about the fact that you're looking for what we call runners or continuation. So in other words, once you get your 200 pips, now let's look at this scenario to where you got in at, say, 99.01. You've taken profit one at 99.31. It's sitting there right now at the 99 near 30 area. It's been sitting there. It's only moved 37 pips for the entire session. Now you have a fundamental decision to make. And let's say that you go ahead and you take profit two at the 25 or 30 pip level. Now you've gotten a trade to where you've taken profit one, you've taken profit two. It's not what you want to do as a swing position trader, but it's what the markets are yielding under current market conditions. And yet you've already gotten your 200 pips. So now you're going to leave that trade open and set an alarm to where if it does come back and knock you out, you're going to see what happens around that area to see if it goes below 99. And if the markets are going to drive it down below 99, maybe give you some more pips going down, or whether you're just saying, okay, I'm going to wait until it settles, let it reverse, and I'll try to ride it back up. Then you're making a decision whether you're wanting to play trending markets or range-bound markets. There is a difference. Now, why am I covering this today? Because this is of huge significance. You need to make a fundamental decision, because we have been in range-bound markets here for the summer months. Are you going to stay as a range-bound trader, and are you fully prepared knowing that you're going to have a loser when it breaks out of that channel? And do you know what your game plan is? If you do, follow it. Now, let's just say that you're a trending player. You don't really care about the range-bound markets. You're just looking for a trending. You're going to have to be more patient. And in the example of the US yen that I'm giving, you're going to have to wait and see if 99.01 holds, or if it takes you out, what happens after 99.01 with timing. Now, if 99.01 gets hit, let's say it gets hit at the London close, there's not going to be a lot of pips that's going to be yielding after the London close. You're going to have to wait until the report comes out tonight and start all over again in the Asian session when that yen should be moving, or a lot of times the Aussie dollar moves. You have to have a fundamental and understanding of the currency pair that you're trading, of which session. Remember, we have the Asian session, early evening U.S., London session overnight, U.S. session during the morning. We all know that the euro-US dollar is going to move usually in the London session and U.S. session. It doesn't move as much in the Asian session unless there's been some huge moves and they're trying to catch up. On the other end of the spectrum, you take a look at the U.S. yen. It's going to move some during the Asian session because that's when Japan is in session. The Aussie dollar is going to move then because their markets are open. So as you understand this, then you're able to build another layer to the foundation. So what is my point of contention of all this before 9 o'clock here, Central, 10 o'clock Eastern? Even when we're having range-bound markets, as a trader, you are learning your trade, no pun intended. You are learning how the markets work, and then it becomes more of a practice regiment to where I call it the feel. And the feel is having an instinct or a gut feeling that what you're doing is right. Brian did not want to take risks, if I can go back to the example, and he had a fundamental reason why he didn't want to take that risk for his trading style. Now, even though the trade did hit, he will be ready the next time because he understood what it was he was trying to accomplish. There will be times when you will get into the markets or not get into the markets, that the markets will yield or the markets will taketh away. The key will be understanding the process and what was your reasoning behind getting in and your reasoning of not getting in or your reasoning of getting out. So it all comes down to management. It comes down to having the game plan, trusting the numbers, following the system, and you gaining experience in live current market conditions to enhance growth as a trader. As you enhance growth as a trader, this comes with experience. And then everything that I'm doing, because it's repetition, the numbers are the same. It's just moving either up or down, or we're consolidating. I wish it was something a lot harder. We're either got a currency pair strengthening or weakening, it's moving up or down, or it's consolidating in a small range, pretty much what the US yen is doing right now. We're moving in a 35 to 40 pip range, waiting for the breakout. This is how the markets react. This is what happens when we can't change it. We have to learn to improvise, adapt, and overcome. Improvise, adapt, and overcome. And then when the markets do break out, whether this US yen now goes to 100 above 99.67 or whether it goes down to 98, we have a game plan in place, and we have already made a fundamental decision that we are going to participate if this happens, or we are not going to participate if that happens. So once again, it comes down to two simple choices. Are you going to play the range-bound markets to where the bottom line is, we're going to be wrong once. It's a 100% absolute, because no matter what range that we stay in, we may get a 3-to-1, 5-to-1, 10-to-1. Heck, some of us have got 12, 13-to-1 returns when it stayed in these ranges. And we've got the pom-poms out, and we're rooting for it, and you stay there. But we know it's going to break out of that range, and we know it's going to break out of this 9900 to 9967 range. And when it does, then we have to be prepared of what our next move is. So we're always looking in advance. This is why I like swing position trading, because you can plot what you're doing in advance. When you're scalping and day trading, you have to react under current market conditions to pick up your few pips or get in and out of the markets. When you're swing position trading, you can actually look for specific numbers and await to see what's going to happen. That is the difference between range-bound markets and trending markets. And if you keep it that simple and you follow the process and you do this repetition day after day after day, then the way Brian explained it today of why he did or did not get into a trade, then that will put you on the probability factors of being right more often than it is wrong. And that's all you need to accomplish in these markets, is being right more than you are wrong. It's learning to minimize risk and let the winners run. So let's get ready and prepare. I'll prepare this roundtable email for later on this afternoon. We'll have the report out tonight. We'll see everybody here tomorrow at 12 Eastern, 11 o'clock Central. We'll then come back Thursday morning. Brian will walk through this process again. We'll talk about what we think, what we know, what we can prove, and what happened after FOMC. And then we'll get ready for another weekend and get ready for next week. Brian, over to you, my friend.
All right, thank you very much, Forex Joe. All right, guys, let's go ahead and wrap it up. I did, while we were chatting here, go into the back office and make sure that FOMC training link is on your schedule. So if you go over to Forex Live and go to schedule, then you'll be on the schedule page, and here in the calendar you can now see the FOMC trading with Forex Joe. So when you click that, you can click here to register, take you over to GoToMeeting, and you can get that set up. I will still send out an email invitation later today, but it is there now, so we know we can do that. So with that said, let's go ahead and wrap it up, and we will see you guys tomorrow for FOMC trading with Forex Joe. And then on Thursday, we're back here for a live class, and I am bringing in a special guest. There's a fellow I talked to quite a bit. His name's Joel Posen. He's going to show us how to use volume with our charts and show how that gives us an edge using price and volume. So using these key levels that we're already noting here, and show how that coincides by putting volume on here. He's going to pull up a US yen or other charts and actually show us how he has been making his living for the last 30 plus years trading on price and volume. So should be really good. I look forward to that because it's been a key piece of the puzzle that I've been missing, and I just can't seem to wrap my head around it. So hopefully seeing that on a live chart is going to help me, and I'm sure help you as well, get that little light bulb moment that Forex Joe often talks about. So with that said, let's go ahead and wrap it up, and we'll see you next time. Have a great one.